Hey everybody, Real Estate Ninja here. I hope you're doing well. I've got some wild news about the real estate market, and it spells doom for Home Depot. And I can't be more honest about that. Unsold inventory is exploding. People delaying remodels. People are strapped. The real estate market has broken. We're already seeing stories out of Texas, Florida, and other states that are completely now just not topping, they're dropping. I'm going to put a link down below if you want a flash sale link for the tax liens and deeds course. In my opinion, it's one of the best courses I've ever done. I set out to make the best course in the country for a fraction of the cost, and my students are already making between 12 and 32% on their money, some of them as quick as 2 weeks after the auction ends. So if you want to learn how to bid on tax liens and buy tax deeds from your home on the internet and how to make money, links down below. All right, first story. And this really, think about the narrative of Home Depot, right? Massive stock. This is something that took a massive hit in 2008, 2009, going into 10 and 12. It was bad. Right now, out of Fast Company, builders unsold inventory now jumps to 2009 levels. Says the housing markets were where buyers can find deals. All right. 2009 was a really bad time for home builders, right? It was excess inventory was stacking up in 2006, then 2007, 2008, 2009 is where we are now at the levels of inventory that new home builders cannot sell, right? It says here, the January figure of 115,000 unsold completed new homes recently published its highest level since July of 2009, which was at 126,000. It says here, to put the number of unsold completed new single-family homes into historic context, Resi Club created a new index, Resi Club's finished homes, whatever. It says here, the index has one simple calculation. The number of unsold completed U.S. single-family homes divided by the annualized rate of U.S. single-family housing starts. It says right here, a higher index score indicates a softer national new construction market with greater supply slack, while a lower index score signifies a tighter new construction market with less supply slack. Now, he says, here's the big picture. The index shows that there's more new construction slack in the 2025 housing market as compared to the 2023 and 2024 markets, because it's getting worse, right? Inventory is rising. People are not showing up to buy homes. It says, however, it's still far less slack than the 2008 bust, but we're getting there. Now, this other story that I want to share with you, and this really does show the market in decay, the housing market. It says right here, this story is out of, as it loads up, the Financial Times. Americans are now delaying home improvements in the latest blow to the housing market. People are now putting off fixing up their home. You know what's interesting about a housing boom and a bust? During a boom, you start to see more unimproved homes be purchased, right? Because the inventory shrinks. People fix them up and they flip them. So you start to see older neighborhoods really starting to shine, new paint, new, landscaping, things like that. And things get really exciting until there's a subsequent bust in the housing market. Then you see, and there are pictures all over the internet from, housing markets, let's say in Detroit in 2006, where everything was nice and new, right? New construction. And then you go back to 2015 and you take the same street, the photo of it, and it's all weeds, nothing growing in the yards, decay, windows boarded up, because most of those people lost their homes. And this is one of those times where you should be thinking ahead and going, how am I going to make money from this? One way is to hold off on buying residential real estate as far as rentals and wait for the prices to come to you, right? The cash flow. In the last handful of years, we saw the prices explode higher, and there are people that thought they were real estate investors, but if you ask them how much they're putting down over 20%. That's not an investor to me. Anyone can make anything break even or cash flow when they've got a ton of money to put into a project, right? That's not an investor. An investor comes in with the bare minimum and they found a good deal, right? that they can purchase a property and either they currently have renters in them, it's making a good cash flow, or they're going to go out, do a couple little minor improvements and get renters in there at a great price, where the bare minimum is they're walking away with 10 to 15% cash on cash. The 1% rule, where rents should be 1% of the closing price of the home. A lot of people do not believe those exist, but they're starting to come back. And it depends on where you look in the market. And it's really important that you either dig deeper when you're doing your research, or you let the market come to you. Now, there's some other stories. Let's see if I can find them on the fly right here. I've got a lot of real estate stories. All right, here we go. Mortgage rates fall as the economy cools. Home contract signings are now hitting an all-time low. Before I go into this, again, back to the whole how are you going to make money? Well, waiting for a rental, letting the price come to you is one. The tax liens and deeds. This is huge because inflation has squeezed a lot of people to where they did not prepare. They did not keep a savings account. So if they lost their job, and job losses are going to go up exponentially this year with the new administration in, or they sat there and they said, no, you know what? I leveraged myself too high. I'm just going to walk away. A lot of people are not paying their taxes. So to buy a home in a tax deed auction, which most people do not understand, are like buying a home 10 times cheaper than getting it at a foreclosure auction, right? Because the start of the auction is how much is owed in taxes and fees to the county, right? That's the starting bid. Whereas you go to a foreclosure auction and the starting bid is how much the bank is owed. I mean, it's just like, hello, one of my coaches, Coach Matt, he went to an auction in, where was it? Parker, Arizona. 3 people, including himself. So take one away. There's 2 other people in the auction bidding on properties. This is a big deal. That's why I did that link, that sale link. As a matter of fact, if you're one of my students, can you do me a favor and type what you think about that tax liens and deeds course down below? It helps me out because I don't fake reviews. Now it says here, the mortgage rates fall. The reason why mortgage rates are falling, because the 10-year isn't falling. It's because banks need to make mortgages. So they're coming out with some really creative ideas on how to get some business. It says here in the week ending February 27th, 30-year fixed rate mortgages averaged 6.76%. That's the 6th straight week of decline for the popular mortgage product, and it's the lowest since before Christmas. Those figures don't include fees or points, and rates in some parts of the country may be higher than or lower than the national average. It says, while most mortgage market observers began the year believing that rates were more likely to rise than fall, the national housing market isn't doing very well, even at current levels. Home contract signings slid to an all-time low in January, the NAR said on Thursday, meaning closings in the future months will also decline. We are in an incredible crash moment right now where you have everything sliding down, both prices and mortgage rates going into the spring. And economists are now starting to say it's going to fall even more. This is an incredible opportunity. Guys, type 1 if you agree. Like, just the opportunity to be able to witness and see all of this happening out on the horizon, right? As far as an investment cycle. And just being able to sit back and go, you know what? I'm going to wait just a little bit to watch what happens. This, to me, is incredibly exciting. And sometimes you've got to be prepared beforehand to do something. That's why I did the tax liens and deeds. They're already exploding, but I've told everyone wait till the springtime. And all these spring auctions in Texas, in Florida, and some other states are going to blow your minds because the public isn't ready for this. They don't understand. 99% of real estate investors have heard, they don't know how to do it. They've heard of tax liens or deeds, but if you ask them, well, how do I go find them? They couldn't tell you where they are. So I've got a link down to the course if you want to check it out. I honestly believe it is the best value for your dollars to educate yourself on how to buy these homes for 10 cents on the dollar at these tax deed auctions. Or if you just want to buy tax liens and go get 8, 12, 18, all the way up to 32%, plus some fees and fines that are in there. If those are applicable, you could make even more money from anywhere between 2 weeks and a year out. which is actually that investment is guaranteed by the government, because if you don't get paid, eventually you file one document and they go force that house into a tax sale, and then you're paid first. It is the craziest investment ever, and people need to hear about it. So if you want, links down below. Hopefully you got something out of this. Thank you so much for watching. The Real Estate Ninja is out.